Hello everyone, welcome back to Just Invest Today. In today's new video, we're talking about Alibaba and Joe Tsai's new interview, talking about everything Alibaba when it comes to the competition, when it comes to restructuring. We have the full picture of Alibaba. We need to be able to hold these shares for the next 5 to 10 years because it might get rough, especially in this market. We know the Chinese stock market is at an all-time low. The sentiment is at an all-time low. We see Alibaba trading right now for like $72 and it's still going down. It doesn't matter what Alibaba does or the earnings growth or the revenue growth or the buyback plan. It doesn't matter at this time. Joe is going to talk about what he has in store for Alibaba and the future of Alibaba. So guys, before we get into this interview, like this video and subscribe to my channel. I would greatly appreciate that. So the first part of this interview I want to talk about is that how Joe actually admits that the increased competition from PDD is kind of hurting the company, because the interviewer does mention the increased market share of PDD and like Shein and companies like that. And how was Alibaba gonna battle this kind of minefield going on in China, man? Because we already know what's happening, and he's not blaming just the macro. He understands the macro is bad, but he knows what he needs to do to kind of kill the competition or kind of go after the competition so you're not just lying down and kind of dying out. That part of this interview was so important for me because he knows that he needs to fix this part of the business, and that's why they reorganized their whole business, got new management in different sectors, and they've been doing everything they can to kind of be more nimble and be more quick.
I think investors want to see more. I think we have had a track record of delivering performance in the past years, but over the more recent years, we haven't done as well because of competition. Of course, there's a macro environment, there's a regulatory environment, there's geopolitics, but when it comes down to it, it's really how well we compete, how well we serve our customers. And those are the areas where in the context of our restructuring, we're really looking into and trying to improve ourselves. That's really what would get our share price back, is to deliver the performance for our shareholders.
So I'm happy that Joe is not making any excuses for the market share decline, and he knows what to do. That's why he's doing the restructuring. Also, he talks about investing in more technology, more AI to kind of get better pricing, get better market share, just evolve as a company. And that's why you saw him put a lot of money into the company with Jack Ma. That is just all about showing confidence that he knows what he's doing. A lot of his family owned money is in Baba. So I can kind of trust that, back it up. He knows how to kind of fix the issue. And that's how I can kind of see success going into the next 5 to 10 years. And then he talks about market penetration, how Alibaba is not even at the pinnacle of where it can be. There's still a huge room for the middle class to grow. There's going to be like 200, 300 million people going into the middle class of China, even more. The penetration of e-commerce is not even at this highest point yet, which is amazing. The cloud market is still premature. Guess what, guys? Look what Alibaba just did. They actually lowered the prices of all their cloud products to gain more market share. They already have majority of the market share in China when it comes to cloud. They have like what, 38%, around that, 38 to like 40% of the market share in their cloud products. So that's amazing already. They're trying to get even more. And we see what Amazon does with AWS and what Microsoft is doing. Imagine when companies start going online more, they start investing in more AI and just doing all those little things that make the Alibaba picture seem very big when it comes down to the next 2 years, next 5 years, next 6 years. So we really got to think long term when we're thinking about Alibaba. Let's listen to Joe to show you what the potential of Alibaba is in the next 5 to 10 years.
You and Jack have been buying up shares, global investors that we've been speaking to calling it a very good bargain. When do you think we can see a meaningful move up in your share price?
There's a couple of secular factors I want to mention. If you look at our Alibaba business, when you boil it down to what's the core, we're in two businesses, e-commerce and cloud computing. The secular forces in e-commerce is that in China, there's 30% penetration of e-commerce to total retail. But over the next 5 years, that penetration is going to go up to 40%. and even higher and beyond. And in terms of cloud computing, you look at the digitization of the whole economy in China. By digitization, I mean capturing data that reflect real activity, business activity in the economy. All of that is being digitized. And so there's an explosion of data. And when you have lots of data, you're going to need cloud computing to manage and handle all of that data. China is about 17% of global GDP, but the size of the data, digital data in China, is approaching 30% of the world.
And when you hear Joe say they're going to focus more on e-commerce and their cloud computing division kind of stick to their core, it's just amazing because they're kind of veering off in different sections and there's different areas, but they're just going to stick to what makes them a lot of money. Their e-commerce with the international growth and their cloud computing. We are basically seeing Alibaba getting rid of non-core assets and just generating money. And this is all amazing because then they can just really bite down on what they're really good at. This has so much potential to show greater profits going into the future as they can kind of hold on more cash, spend more money where they need to, just generate more revenue and income and free cash flow while buying back shares and now giving us an annual dividend. So this is all positive news. And then when we're going on to the whole China-USA relationships, he mentions that it's going to continue to be competitive and fierce, but China and USA have more kind of stuff going on together than more than the bad stuff that everyone's talking about. Like, they have a lot of trade going on between both countries, and that's going to spur meaningful relationships between the two. They still need to work together. They have a lot of people internationally going back and forth, so that's another positive. So they have to work together while still maintaining competitiveness because that's going to continue. They're not going to go back to the olden days where USA doesn't feel threatened by China. Now they do. So this might continue to keep the PEs low of these companies or people not kind of reevaluating them as much, but it doesn't matter. As long as you're buying back shares, giving us a dividend, continue to see growth, the fundamentals have to match up with the company eventually. It can take 5 years, 10 years, 2 years. We don't know, but the fundamentals always match the company if we truly believe in Ben Graham, the Godfather, saying in the short term is a voting machine, in the long term it's a weighing machine. So guys, what do you think about this whole interview with Joe? What do you think about Alibaba's future? Do you see a path to $200 to $300 to $400 a share? Guys, what do you think about this video? Like and subscribe to my channel. Peace.